Yeah, today we are complete computation of the income from the house property. And income house property. Yes, in the today's video we are dealing with the how to calculate the how income from the house property or the income from the house property. First of all, we need the gross annual value. Gross annual value. And what is the gross annual value? We are also discussing about this. Just we need some particulars, and we need the let out part. Let out means the property which are giving as a rent, where the rent is accrued rights and other is self-occupied. There are two, we can say the two property as a self-occupied, maximum up to. So particulars let out, and this is gross annual value. It is section number. Section, section 23, gross annual value, discusses about the gross annual value. And what is the GAV? Gross annual value is the higher of RER, which means reasonable expected rent, and reasonable expected rent and the actual rent received. Actual rent received. Received. And what is the reasonable expected rent? It is the higher of higher of 2, which is the GMV, gross municipal value. Gross municipal value and gross municipal value and the fair rent. Fair rent means the rent which is near the areas, and also we can calculate gross municipal gross municipal value. We can also calculate by the actual rent paid divided by municipal tax percentage. Gross and you can say the municipal tax divided by percentage. We can calculate the gross municipal value. Municipal value. Yeah. And the actual rent. After the gross annual value, we can have some parts which is we are going to less, as a we are having like the local taxes. Local taxes actually paid. Uh, it is based on cash basis also, and it is the local taxes paid by owner, not by the rent uh, owner, actual owner, to the authority, to local authority. Yeah. This include the municipal tax, water tax, sewage tax, वगैरह वगैरह. I can example. Well, we can take municipal municipal tax and our water tax, sewage tax, tax, etc. These are the some of the examples. Then after we are getting NAV, net annual value, net annual value. After we getting less from the GAV, gross annual value, less municipal tax, we get the net annual value, which is NAV. Gross annual value, GAV. Now, after calculate the net annual value, we have less some deductions. Less deductions, which are just deduction under section 24. There are two 24E and 24B. There are two subsections. Also 24B. Just a minute. Just a minute. Yeah. Then after deduction, we are calculating two types of deduction. Which first of all is the standard deduction. What is the amount of standard deduction, which is the 30% at the rate of 30%. Just a minute. Percentage at the rate of 30% of NAV. And then the first of all is the standard deduction. Then we are paying the interest. Interest is what type of interest? Interest is regarding the borrowed capital. Interest on what? The borrowed capital. Capital, which is mainly from bank or some other entity. After we deduct these two deduction, we get the total. Total. After this total amount, we also some add the miscellaneous things like add what thing we add is the unrealized rent. Unrealized rent under section 25A. In the section 25A, we are adding the unrealized rent, or also we deduct the deductions also from this. Less deduction at the rate of 30%. Deductions, and after the add, we at last come across with the total income from house property. From house property. And this is the format. And this is how we calculate the income from the house property section. In case I am, yeah. Wait a minute. Yeah, this is the let out part, and the self occupied part is the exempted, and we can fill, and also we can calculate the NAV here equal to, we have GAV, gross annual value, here, plus, no, minus deductions, less deduction part will be there. Yeah, deduction part, deduction. We can here calculate, and the higher of two, so we use the command maximum, which is let be there, higher of, yeah, this is equal to max, which to column, higher of reasonable expected rent and the actual rent, reasonable expected rent and the actual rent received, and the I5. Oh, just, yeah, okay. And what is the reasonable expected rent? Here we can say maximum, higher of this, comma this. Okay, just after this we can let out part, then total we can get from the this minus deduction number 1 at the rate of 30% minus deduction number 2, just a minute. Okay, then add, we can, if is there anything remaining, we can add this amount minus deduction this amount. We can get the income from the house property. Here section number will be 25. Okay, unrealized rent.